6 months ago, my client was drowning in 180,000 euros in German taxes, and today he pays zero. And what changed? The UAE tax residency. And thanks to new rules, it has never been easier to get. I've seen firsthand how much tax pressure entrepreneurs face in Europe and how big the difference can be once you set things up properly in the UAE. And in March 2023, the UAE flipped the script with Cabinet Decision number 85, introducing 3 clear pathways to claim tax residency, even if you're not a millionaire. EY called it additional clarity. We call it freedom, and today I'll show you exactly how to get it. Subscribe if you're ready to stop bleeding taxes and start keeping what you really earn. Now, before I show you these new pathways, you need to understand why this matters so much right now. Countries around the world are raising taxes. Australia just made it nearly impossible to leave their tax system. The UK keeps increasing tax rates. Germany, France, Canada, they're all squeezing their taxpayers harder than ever. Meanwhile, the UAE went in the opposite direction. In March 2023, they introduced the clearest, most accessible tax residency rules in the world because they want to attract the kind of people these other countries are literally driving away. And BYC says the UAE new tax residency rules follow global standard and make it clear for both individuals and also companies to understand their residency status. So this wasn't an accident. It was designed to make the UAE tax residency easier to obtain and prove internationally. The result is 0% personal income tax UAE, 0% capital gain tax in the UAE, and tax-free rental income on any Dubai real estate you own. So compare that to paying 45% or more in your home country right now. So these aren't complicated offshore tricks. This is real opportunity. These are legitimate, internationally recognized tax residency rules backed by double taxation treaties with over 130 countries. Now, let me walk you through the 3 pathways the UAE created to make this simple. The first pathway is what I call the frequent visitor route. If you can spend 183 days in the UAE in any 12-month period, you automatically qualify for UAE tax residency. The days you don't need to be consecutive, even partial days are counting now. The strategy works perfectly for entrepreneurs, consultants, or anyone with location flexibility. So you can spend half your time in Dubai and half traveling and still qualify for zero tax UAE status. The second pathway is the business resident route, and this is where it gets interesting because you only need 90 days in the UAE if you have a permanent place or resident or employment there. According to International Advisor's recent analysis, this route shows a significant personal and economic presence in the country, like they said, and is designed for people with genuine business activities within here in the UAE. So this means if you set up a business in the UAE or get employed by a UAE company, you can establish tax residency with just 3 months of presence. So this is perfect for people who want UAE tax residency but can't commit to 183 days. So the third pathway is the most flexible, the center of life route. If the UAE becomes your primarily place of residence and the center of your financial and also personal interests, you can qualify for a tax residency certificate without strict day counting. Now here's where this connects to long-term planning. These pathways works even better when combined with the UAE Golden Visa program. The UAE Golden Visa gives you a 10-year Golden Visa that is renewable, which means you can secure your UAE tax residency for the long term. And the 2025 updates have made Golden Visa requirements much more accessible, and I made a YouTube video, and click here to make sure that you can watch that video on our channel. So according to the National's January 2025 report, the UAE scraped the requirement for a minimum down payment of 1 million dirhams for people to qualify for a golden visa through real estate investments. So this makes it much easier for investors to qualify these days. So for real estate investors, you need 2 million dirhams in property value. But here's what changed. You can now use offline property to buy investments, and you don't need the old 1 million dirham minimum down payment anymore. You can now apply for the golden visa by investing in offline property, as long as you pay at least 50% of the property's value upfront. For entrepreneurs, you need at least 500k dirhams in project value. So this opens the door for content creators too, because Dubai just launched a content creator visa as part of their UAE Golden Visa program. For salary professionals, you need at least 30,000 dirhams basic salary and 2 years with your current employer. So this new rule eliminates any ambiguity or interpretation, making it easier and faster to process the UAE Golden Visa these days. However, reports suggest that applications are being rejected due to insufficient company experience. So the 2-year requirement is strictly unforced. Keep it in mind. But here's the key. Once you have your pathway to UAE tax residency, you can then apply for the UAE visa to secure it, for example, long term. So this gives you the best of both worlds. Immediately tax benefits and long-term security as well. Let me show you how this works in practice with real client examples. Take, for example, the German client I mentioned at the beginning. He chose the business resident pathway. We helped him establish a IFSA company in Dubai, where we're #1 partner with, which gave him the employment requirement for the 90-day route. So he spent just 3 months in Dubai last year and qualified for UAE tax residency, but he also really lived here, so his center of life was also here, so he was completely fine. Then we helped him apply for the UAE Golden Visa through the entrepreneurship route, and now he has a 10-year Golden Visa and pays 0 personal income tax instead of 180,000 euros annually. Another client, a UK property investor, used the real estate route. She bought off-land property to buy worth 2.5 million dirhams, which qualified her for the UAE Golden Visa. She then established the UAE tax residency through the frequent visitor pathway and now enjoys tax-free income from her Dubai property portfolio. So a third client took the employment route. His company agreed to establish a Dubai office and he became the Dubai-based regional manager. So he qualified for UAE tax residency through the business resident pathway and also got the UAE Golden Visa through the salary route. So you can see it here. In each case, we matched the tax residency pathway with the right UAE Golden Visa strategy based on their specific situation and goals. Now, that brings me to an important point about timing. Should you move to Dubai? And if so, when? So the answer depends on your tax situation, of course, and also your business needs. And here's what I tell all my clients frequently. The current rules represent a unique window of opportunity. I always say move to Dubai if you're earning at least $80,000 annually and paying high taxes. So the math is simple. Your tax savings will often exceed your cost of living in Dubai. So move to Dubai if you want to protect your wealth from increasing government overreach. Political also and economic stability matters more these days than any days ever. Move to Dubai if you're building an international business. Dubai's location gives you access to growing markets in Asia, Africa, and Middle East. But don't move to Dubai if you're not prepared for cultural differences or if your business absolutely requires you to be physically present in your home country most of the time. So the key is having the right strategy that matches your specific situation. And here's a step-by-step action plan if you're serious about UAE tax residency. Step 1. Choose your pathway. High earners with flexibility should consider the frequent visitor route. Entrepreneurs should look at the business resident pathway, and people with capital should explore the real estate and golden visa combination. Step 2. Establish your UAE presence. And this means getting the right visa, setting up accommodation, and creating genuine economic substance. So you can't be just a tourist. You need real ties to the UAE. Step 3. Apply for your UAE tax residency certificate once you meet the requirements. And according to the KPMG's October 2024 guide on tax residency rules, the TRC can now be applied during the tax period. So previous, this was only possible after the completion of the tax period, and this makes the process much faster than before. Then, step 4, secure your long-term position with the UAE Golden Visa. And this gives you a 10 years of security and the ability to sponsor family members as well. At Emifast, we handle this entire process for our clients. We start out by analyzing your specific situation to determine the best pathway. Then we help your business set up UAE Golden Visa applications and, of course, ongoing compliance with our in-house accounting team. And most of our clients complete the process in, let's say, 1-2 months and start really then enjoying the tax benefits immediately. But here's what you need to really understand. This window won't stay open forever. The global trend is toward higher taxes and more restrictive rules. And the OECD is pushing for tax harmonization, and countries are sharing more and more information than ever before. So right now, the UAE offers the best combination of accessibility, benefits, and legitimacy for tax optimization. But international pressure could change this, of course. So the time to act while these favorable rules are in place and while the process is still straightforward. Now let me address the questions I get asked most often about UAE tax residency. Is this legitimate? Absolutely. The UAE has clear laws, international treaties, and recognized tax residency rules. So this isn't going to be a loophole or something shady. This is official government policy designed to attract talent and also investment. You ask, what about my home country? And this is where proper planning matters. You need to secure your move to qualify for UAE tax residency while avoiding triggers for tax residency also in your home country. And different countries have, of course, different rules, which is why professional guidance is crucial. We can, of course, help you with that. So another question we hear a lot is, do you have to give up your citizenship? The answer is no. UAE tax residency is completely separate from citizenship. You keep your passport and can maintain ties to your home country within limits. What about substance requirements, Arturo? The UAE requires genuine presence and also activities. So you can't just get a visa and disappear, but the requirements are reasonable, of course, and also achievable if you work with proper planning. So the bottom line is this. UAE 0% tax residency is now more accessible than it's ever been, but it still requires proper execution. The three pathways I've shown you gave almost anyone earning decent money a route to legitimate zero UAE tax status. So the UAE Golden Visa program provides long-term security, and the tax benefits are real and also substantial. But success depends on choosing the right strategy for your situation and implementing it correctly as well. If you're paying high taxes and want to explore your options, visit our website at emifast.com for a free consultation. We will analyze your specific circumstances and show you exactly which pathway makes sense for you, or click here under the link in the description to book your meeting. So now my question to you is, what is holding you back for exploring UAE tax residency? Is it uncertainty about the process, concerns maybe about legitimacy, or questions about whether it fits your lifestyle? Let me know in the comments, and if this opened your eyes to possibilities you didn't know, for example, that existed even, share it with other entrepreneurs and investors who are tired of paying high taxes. And remember, guys, UAE tax residency is on easy mode right now, but the definition of easy can change. The smart move is to act while the current favorable rules are in place. Thank you for watching, and I'll see you in the next video.